Roth accounts in the Trump era. Hi, this is financial planner Sean Mullaney. Let's discuss. So the election's over, and I think it informs our thinking when it comes to traditional versus Roth, and just how much should we be putting in Roths. So the first thing to think about is Roth conversions at year-end in 2024. And prior to the election, there were plenty of commentators out there saying, oh boy, folks better do these Roth conversions before the year 2026. The thought being that the temporary Tax Cuts and Jobs Act rate reductions would be going away. And now that we have Trump and a Republican Congress in 2025, the expectation surely is that the first round of Trump tax cuts from 2017 will not be allowed to expire. So that means, generally speaking, we don't need to be in that much of a hurry to do Roth conversions prior to 2026. And in fact, I would always say, look, do them based on when they make sense for you, not based on the conventional wisdom about future tax hikes. Okay, well, that's one issue. But I think we now need to start thinking bigger picture about Roths. And it comes from what Trump said during the campaign about taxes. And one thing about the former and soon-to-be president is he is not shy. And it turns out he's not all that shy when it comes to taxes. His campaign was full of, there's going to be no tax on Social Security, no tax on tips, no tax on overtime. And he's sort of signaling a disfavor or dislike for income taxes. And he was on the Dave Ramsey. He was interviewed by Dave Ramsey. He was on Joe Rogan talking about how great tariffs were. And he said so in public speeches as well. So look, Trump isn't telling us that the income tax is just going to go away. But he's signaling a magnitude shift, right? Where at least there's going to be some reduction in magnitude in income tax and an increase in magnitude in tariffs. Okay, well, what does that mean when it comes to traditional versus Roth? And what does it mean in terms of when should we be getting money into Roths, right? So the first thing is, when we're contributing to traditional retirement accounts, we pay tax at our highest marginal rate. And there's not that much in Trump's agenda that reduces that rate other than keeping it where it is in the TCJA paradigm. So it's still pretty high for many working Americans. That marginal rate, the benefit of getting the money in the traditional 401k, that's still a pretty healthy benefit because that rate tends to be relatively high still. But where I think Trump policy is really changing the world is on the distribution phase, the retirement phase of the retirement account, where we're taking that money out. Maybe we're doing Roth conversions. Maybe we're just living off the money in retirement, whatever it is. The big promise that matters here is this promise to eliminate tax on Social Security. So that's a promise to reduce taxable income in retirement, essentially zeroing out Social Security. And boy, that's a nice thing if we're retired for a number of reasons. One of them is the phenomenon I've previously referred to on the channel as the hidden Roth IRA. This is the idea that in a low yield world, you're going to have retirees take money against traditional IRA or from traditional IRAs, from traditional 401ks, and it's going to be taxed against the standard deduction. The standard deduction will soak it up, and to the extent of the standard deduction, that person has what I refer to as the hidden Roth IRA. They took money from a retirement account. They paid zero federal income tax on that. Isn't that a Roth IRA? Well, no, it's a hidden Roth IRA, and it lurks inside your traditional IRA, your traditional 401k. That's nice, but it's a limited opportunity in a world where Social Security is taxable. Because Social Security comes in and says, well, you're going to have this income every year, and it's going to be the income that soaks up the standard deduction, maybe the 10% bracket into the 12% bracket. So once you're collecting Social Security, you don't get that hidden Roth IRA. Those traditional retirement account withdrawals are going against the 12%, 22%, and so on and so forth. Well, if we get rid of the taxation on Social Security, which is a promise the electorate should hold Trump and the Republicans to, well, guess what? that hidden Roth IRA isn't that limited anymore. It can go for the entirety of your retirement. You can collect Social Security whenever, and it won't increase your taxable income. So that means a lot of traditional retirement account distributions will go against the standard deduction. And then only after it goes through the standard deduction does it go against the 10, the 12, the 22% bracket. So you're seeing where this is going. Throughout our retirement, we can have a hidden Roth IRA, and we're lowering the tax rate on our traditional IRA distributions. Boy, that seems like a pretty good deal. Get the highest deduction, the deduction against the highest rate possible in our working years. And then in retirement, we have the hidden Roth IRA, and then maybe some of it goes against the 10% and the 12%, and our effective tax rate is going to be pretty low. Now, does that mean we always do traditional and we never do Roth? Well, not to my mind. I think Roth still very much has a role to play in a Trump era world, right? For a couple reasons. One, you never know what the future politicians are going to do. Now, I'm starting to think the future politicians might like these tariffs because you and I don't file tariff tax returns. So when we go to the ballot box on election day or before it, guess what? We're not going to be pissed off because of tariffs, right? We didn't file a tariff tax return. So I think future politicians are going to say, oh, these tariffs, they're not so bad. If they're a reason not to have as much in the way of income tax, maybe we like that, right? So that's one thing to keep an eye on. Second thing to keep an eye on is I think Roths have a risk mitigation, right? Maybe my analysis isn't right and future politicians will increase income tax rates. So that is something to consider. But also, there are ways to get money into Roths that don't incur additional income tax. And I think that's where we should focus when we're thinking about, hey, can we get some money into Roths, right? So what does that look like? That looks like a backdoor Roth IRA, where our income says we can't deduct a traditional IRA contribution in most cases, and we don't qualify for the annual Roth IRA contribution. Okay, so what could we do? Well, what we could do in that case is the so-called backdoor Roth IRA if we have the right profile. But the nice thing about the backdoor Roth is it is not a taxable way of getting money into a Roth account. Right? We didn't forego any tax deduction to do that. So that's part of the reason in the Trump era, I like the backdoor Roth IRA. Let's compare and contrast that now to a Roth 401k contribution at work. There's no income limit on that, right? We can make $10 million in our W-2 and max out a Roth 401k. And that may not be a bad strategy. But here's the thing. Regardless of our income, we are sacrificing a tax deduction by putting the money in the Roth 401k instead of a traditional 401k, right? That is, we're paying tax to get into the Roth. And I think in this new era, that may not make as much sense, or at least we should question it, right? I'm not giving you advice in this video, and I readily concede that we have to keep thinking about this stuff. We have to see where 2025 takes us. But the signals are that retirees are going to be lightly taxed in retirement and income taxes are sort of on the way down and maybe tariffs are on the way up to replace them. That's fine. But the signal seems to be, well, in our highest earning years, there's not going to be that much tax relief. But in retirement, there might be a ton of tax relief by getting rid of the income tax on Social Security, which would then let many traditional retirement account withdrawals simply be tax-free, federally anyway, against the standard deduction. So I do think it is time to start questioning paying tax to get into Roths. Not that we never do Roth, but why should we be paying tax to get into Roths when traditional retirement account withdrawals in retirement are looking like they're going to be even more lightly taxed? So what do you think about traditional versus Roth? Do you think the election results play a big role in our thinking on that? Let me know in the comments below. If you like this video, please mash that like button and subscribe to my channel. I'll see you next time.